If you're looking for highly educational market analysis, you're in the right place. You're in the Transparent FX Academy. I'm Nick, a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, I want to speak about gold. Now, why do I want to speak about this commodity? Because at the moment we do have quite interesting price action and structure. So what I will be doing is, as usual, performing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly, what we can see is that from a monthly perspective, the market has currently tested a very strong level of previous monthly resistance, now turns support here, which the market tested and immediately started rejecting to the upside. If we look at the bigger picture pattern, we can see a very strong impulse followed by this complex correction, after which what you expect in general is more continuation to the upside for the creation of a new higher high. So in this case, for the creation of a new monthly higher high. So everything seems pretty bullish here, especially if we will have this monthly candle here close with this shape, so a very long wick and a green body. What you expect is for the next candle to fill in the wick, because on the higher time frames, on the lower time frames, you will actually have an impulse and correction, in which the correction is exactly the wick that we see here on the monthly time frame, after which we do expect more continuation to the upside. So here on the monthly, everything seems pretty bullish. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we can see how at the moment we are testing quite strong previous weekly resistance, turned support at this level, from which we do expect a potential rejection higher, possibly for the creation of a new weekly higher high. So everything here as well looks pretty bullish. Now in general, if you have an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment is testing the 0.786 of the Fibonacci taken on this weekly impulse, which is in fact a strong level of weekly support and demand that we do expect this market to potentially reject to the upside. Going down on the daily, what do we see? Now here on the daily, we can see how in approaching this level, the market has also created this M pattern. And in general, after the creation of an M pattern, what you want to see is the market create a move to the upside. Specifically, you would like to see the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily, we do expect a potential rejection to the upside and for the market to complete the pattern at its previous support turned resistance. We can also see how we just created this horizontal accumulation around this area, showing even more potential for a move to the upside. Now, if we go and see what we have when it comes to the COT data, so what the non-commercials, so the biggest speculators in the market are doing, we can see how lately the net positions of gold have been growing. We went from having 172k net positions all the way up to having 261k net positions, with 346k longs at the moment compared to only 84k shorts. So gold is getting quite bullish for this potential move to the upside. So how we will be approaching this potential longing opportunity with students. Now, as usual, we would be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we would be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is this previous support, turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of the strategies. Then you also get a daily market breakdown every day to see which pairs I'm looking for according to the rules of the strategies, and you also have the possibility to ask questions and get the answers the same day. So it's a very complete program. We're also currently running a special promotion, and to find out more, the link is in the description, and I will see you on it.